markets are seeing a sharp sell-off, and we have Parag Thakkar, head fund manager from Fort Capital, joining us to give us some insights on what could be leading to this fall in markets. So Parag, to start off with, the cues coming in from the global markets were quite positive. We also managed to get into the positive territory in trade. But what are the concerns in the market, what that could have led to this sharp sell-off that we have seen currently?
See, I will tell you, in my view, there is no broader concern because the dollar index, US 10-year bond yield, even Dow futures, Nasdaq futures are all behaving well. So basically, there is no such macro issue right now in the market. The issue can be specific and related to high PE stocks where narrative was going on, right? So even a slight disappointment in high PE stocks can lead to a big fall in those stocks, and that kind of thing upsets the market, and that kind of thing also leads to some, I would say, capitulation in other stocks also. And I would take that as an opportunity to buy stocks like SBI, ICICI, with a disclaimer that with a medium to long-term view, and one can always take guidance of their individual advisors. But I would take this as an opportunity to buy stocks like SBI, ICICI, kind of stocks in this kind of a big fall, where the macros are actually positive today.
Right. So Parag, Hiral on this side, you're saying macros are positive, agreed. Is the market reading into something from the earnings that have come in so far, or from the expectations that are coming out? Because the stocks have been slightly under pressure, especially the ones which are heavily dependent on the numbers.
Absolutely. So basically, see, what I always believe in my investment philosophy is the more PE you pay, the higher the expectations are, right? So if you pay a 200 PE for a stock which is growing at 30, 40, 50%, if there is a disappointment of 5% here or there, also stock will correct by 30, 40%. And that is what is happening in the markets. And that is why I always tell people not to get carried away with the earning momentum which you are seeing on a quarterly basis. You have a view of intrinsic value of the business in your mind. And no business in this world can grow at 100% for 10 years, right? And so you cannot be such high PEs. You cannot pay such high PEs for any business. And so this is bound to happen. This I was expecting from beginning, but it has delayed a bit. But now it has started to happen. That capitulation in so-called high growth stocks has started to happen.
Right. So given this fall that we are currently seeing in markets, any advice that you are giving to your investors? Should they continue to stick with large caps or mid or small caps, and any sector specific ideas as well?
So as I told you, I remain very convinced on SBI, ICICI kind of names. Kotak, of course, reported excellent numbers. So BFSI is the space. Cement is another space where earnings have bottomed out. Yesterday on your channel only, TVS Motors gave good commentary. I would say that such high quality tried and tested names which are available at a reasonable valuation and 20 to 25% below their highs are the stocks to buy in such corrections.
Okay.
So banking, cement and very selected two-wheelers.
So Parag, my last question coming to you is, how much further pressure are you expecting to see from current levels in terms of Nifty and Bank Nifty?
So I would say that, in my view, when the results of ICICI Bank and those kind of starts come on 25th or so, and then of course everything depends on budget, because Trump event is out of the way now, and that has not caused any major disruption in the macros of like dollar index and US 10-year. So now everything depends on budget. Of course, everybody would like to wait out till budget to buy new positions. But my channel checks are suggesting that even cement demand and two-wheeler demand has improved from 15 December and 1st January onwards as government capex has started. So I would say that I am bullish from economy perspective, and hence economy-related stocks which are falling today because of some specific reasons, like these high-growth companies faltering on their earning expectations.
Well, thank you, Parag, for joining us and giving us your insights about the markets.